Somany Ceramics, they posted a weak set of numbers with tepid volume growth of close to around 14%, keeping the top line muted. The margins as well have contracted on a year-on-year basis, but the hope is that going ahead, there'll be an improvement in margins, and the hope is that volumes as well will pick up. To understand that and more, we're joined by Abhishek Somany, the MD and CEO at Somany Ceramics. Hi, Abhishek. Good morning. Always good hearing your thoughts. Let's address a couple of factors. One is, how is demand shaping up? And can you achieve that full year volume guidance, I think of around 66 to around 68 MSM? Is that still on the cards? And what about margins? They are in that vicinity of around 7%. But since volumes are picking up and input costs are cooling off, can they improve from here on? Go ahead.
Yes, so margins, the volume has been a little muted, at least in the quarter three. Quarter one, quarter two also weren't the best. So I don't think we would be able to match the kind of projections we had made, but we'd be somewhere there. It won't be too much off, is what we think. Hopefully, Jan, Feb, March should be better. Margins, that there has been the gas prices, which is the biggest hit in the margins, have started coming off. But the real value of that will start being seen only in the next quarter, because gas is a moving average, and we've seen it coming off only in January.
Abhishek, looking for a couple of numbers on both those two aspects. One is, you won't be at 66 MSM. So what do you end with? A 5% miss? Will you end closer to around 63 MSM? Is that possible? Or is it going to be a little bit lower? And margins will improve by how much? By 100 basis points, 150 basis points? Give us a broad margin band. Go ahead.
Yeah, so I think it'll be more than the volume number which you just mentioned. We should be slightly more than that, so it won't be that big a miss. But on the margins, as I could hear even earlier in this news channel, that the oil volatility is huge. So that is something I can't give you a forward-looking statement, but definitely the oil prices, the gas prices for us are lower than what it was last quarter. But coupled with that, it is quarter four, and the demand is a little muted. Therefore, there would be a slight bit of schemes which we will give to the dealers, a little bit of discounts which we would give to the dealers for the offtake. So maybe a little bit of that may be passed on. So I will not be able to give you any forward-looking statement as to what the increase or what the addition would be on the margins, but there definitely would be an addition, because volumes will be up and the input price is also slightly lower.
Right. Abhishek, hi, good morning. Prashant here. So how is the overall demand scenario underlying? Is it weakening? Is it strengthening? What are you seeing? We had, for example, we spoke with companies like Prince Pipes yesterday, who spoke to us about, and their view is that construction, real estate, etc., is doing very well. We spoke with Astral, yesterday. Again, their view is that things are looking strong. But I just want to understand from you, what's your sense?
Yeah, so I think in our industry, there are two segments. There is one which is the retail, and the other one is the projects. As far as projects, which you talked about, real estate numbers of Oberoi and various other companies which have done very well. So I think those numbers only kick in for tile industries 15 to 18 months down, because we're the last in the chain to get consumed. So that's as far as project is concerned. And we're looking at a huge upturn in real estate. So bracing for a great future. Now comes to retail. In the retail, we sell through dealers. Because the fuel prices had gone up so sharply, and now it is coming off, the dealers are also a little tentative to stock up. So the stock in the channel is very little. They're wondering how much more the price will fall down. Although I don't see the prices falling down very much, in other than the small schemes, 1.5%, which we would get. So I think they're tentative, and therefore there's been a little bit of destocking. Other than that, in the northern and various other parts of the country, there's been a huge festive seasons, marriages, etc., plus the winter. So quarter three has been a little tepid. Other than that, the export also took a beating in Q3, although it is up from Q2, but not as much as we thought it would be. Again, because Europe has just come back on to start taking material. So I see a large export uptake from Morbi, the cluster where tiles are produced, which means that the demand for the branded segment would only go up in the future, as a lot of their material would start getting exported. We're looking, currently the export is approximately 1,300 crore rupees month, up from about 1,100 crore rupees, and we see this going up to about 1,500, 1,600 crore rupees per month for next year.
Sure. Okay. It's interesting that you point out that in the retail segment, the growth is looking very strong, especially, from a lot of real estate players. So you have a capacity, a capex expansion project across 3 regions that you've completed now. You have, I think, 73 MSM tiles manufacturing capacity. Would you look to expand any further, or is this it in terms of capex plans for the next year?
Very right. If you've seen in the last results, we have capacity utilization is about 87%. So most of the capacity we put in have gone on stream. We are currently doing another expansion of 4 million standard cubic meter, 4 million square meters of tiles, which will be up and running around mid next year, financial year. So about September, October is when we see that coming on. That's for the big slab tiles. It's a state-of-the-art Continua Plus plant. So that's going to be happening sometime mid next year.
And very quickly, do you want to give us that sanitary ware business? I think you were expecting it to scale closer to around 300 crores. Is that on the cards?
Yes, so we would be anywhere between 275 and 300 crores. Again, off by the same kind of percentages. But there we are looking at a very strong next year because the built-in capacity for bath fittings and for sanitary ware would be in place.
So 275 crores will be this year in FY23?
Yeah, correct. Somewhere there.
And next year will be even better. So you can scale maybe higher. Approximately what number should we look at?
I think we should be looking at between a 20-30% growth because it's a small base.
Okay. All right. Thanks so much, Abhishek, for stopping by and giving us those details. Looking forward to having a chat with you sometime during the quarter yet again. For the time being, we'll slip into a short break. But let me tell you what's lined up for the next half hour of the show.